2 p.m. Central African time. A very good afternoon to you and welcome to this edition of Market View. This is the Tuesday edition. Eswatini's film industry is experiencing a noticeable shift. For many, many years, it operated on the fringes, underfunded, under-recognized, and driven largely by individual passion. Well, today, it is pushing forward with a renewed sense of purpose. A fresh generation of filmmakers is taking up space. Audiences are demanding homegrown content, and obviously the conversation around film as both a cultural as well as an economic asset that is gaining traction now. But the momentum alone will not be enough. What remains uncertain is whether the currency or the current energy can be translated into a formalized industry, one with policy support, with professional pathways, as well as commercial value. Commercial value being very important there. So in studio, we're going to have Sandile Makanya, the chairperson of the Eswatini Independent Film Producers, who is going to join us to unpack where the industry currently stands, who is driving the work on the ground, and what it will take to build a film sector that not only tells our stories but also stimulates jobs, stimulates skills, as well as sustainable growth. So that conversation coming right up after our business news, which will begin just now. Now, first story, with Eswatini's youth unemployment rate sitting at least 48.7%, the government has proposed initiatives to strike a balance between skills and income generation. Now, among these is a focus on technical and vocational and training, popularly known as TVET, to empower young people to build practical and demand skills. What's noting is impressive progress in the world of film and television. Now, this next report focuses on the possibilities in the film industry.
Through sufficient funding and infrastructure, the African creative economy is projected to reach $200 billion by 2030, which represents 4% of the continent's GDP. According to the National Skills Anticipation Study, Eswatini continues to face significant skills mismatches and shortages across all priority sectors. However, the big screens appear to be promising. The local film and television industry is still emerging and remains small compared to leading counterparts such as Hollywood, Bollywood, Nigeria's Nollywood, and the South African scene. About 50 film and television graduates emerge annually in the kingdom, mainly from Limpopo University. Many of them are paving their way in the wake of scanty career opportunities in the country. From exceptional videography and cinematography, they are responding to the call, telling compelling native stories. Among these are local films Liana, Bagangwane, and the recently premiered Mhlaba the Street Kid, to name a few. Many of these local releases are celebrated for generating tourism interest and enhancing cultural visibility. Despite the progress, challenges persist. These include minimal funding, inadequate infrastructure, and weak distribution, with the country being home to only 2 cinemas. In accordance with existing legislations, the Eswatini Copyrights and Neighboring Rights Act of 2018 protects the rights of creators over their original works, including audiovisual works, ensuring that they benefit. Additionally, provisions in the Cinematography Act of 1920 mandate filmmakers in Eswatini to obtain a permit prior to filming. In April this year, the government allocated 200,000 Malangini towards the creative sector. This amount was split equally between a national short film competition and the launch of a creative industry development fund to be administered by the Eswatini Copyright Society. For Market View, Notseles Tole, Babane.
Now, in international news, the BRICS group of emerging market powers, the acronym stands for Brazil, Russia, India, China, and South Africa, has gone from a slogan dreamed up by former Goldman Sachs head of global economic research Jim O'Neill to a real-world club with growing economic and political weight. It almost doubled in size in 2024, pairing several major energy producers, including the United Arab Emirates and Iran. U.S. President Donald Trump's policies and his America First mantra has created an opening for the group to position itself as a counterweight to Western-led institutions. But of course, with the lack of shared values and identity, can it become a meaningful global force?
The most important emerging economies in the world are the four BRICS: Brazil, Russia, India, and China.
My fellow Americans, this is Liberation Day.
This mantra,
America first,
has created an opening.
The trade war increased the solidarity between BRICS nations. The BRICS are now emerging as really the only global forum that can stand up to Trump's trade war.
10 countries equals economic power. Look at how the original BRICS have grown compared to the G7 in terms of global GDP since 2009. It surpassed the G7 in 2019. Now add in the expanded lineup, and its share is nearly 40%.
In terms of GDP by purchasing parity, it has overtaken the G7 countries. The trajectory is clear. BRICS countries are growing faster. Their populations are growing as well, for most of them.
This boom in population and wealth has also given the group more political might, which in turn has made more countries interested in joining. Sanctions imposed by the US and Europe on Russia are one reason why trade among the bloc's first 5 members rose 40% to over $700 billion from 2021 to 2024. Sanctions also contributed to an increasing amount of all this trade being done in local currencies. Look at the red line. That's use of the yuan bypassing the dollar in China's overseas transactions.
China represents more than 35% of Russia's external trade.
BRICS has even talked about a common currency.
Overall, BRICS countries support reduced trade in US dollar as a tool, as a method to reduce overall Western economic dominance in the global economy.
China's influence within the BRICS Plus club cannot be overstated.
China is the biggest, most powerful, richest country in the BRICS group. So the BRICS works as an instrument for China to improve its economic and political power on the global stage.
Trade relationships within BRICS are not as developed as, say, within the EU. BRICS is not a trading bloc or group. It wasn't meant to be one. Each country is dealing with the issue of tariffs individually.
Brazil doesn't really want to pick sides. Brazil wants to have the ability to trade with the US, trade with China, with the European Union, all at the same time.
So even as the US steps back from its role as a global leader, the disparate nature of the BRICS Plus coalition is its weakness. Although size gives it clout and opportunity, divisions may keep it from bending the global order towards its goals.
I think it's difficult for the BRICS countries to really pursue a joint path on the things that really matter for them collectively, as well as for the world. It's very effective as a symbolic grouping, but how that evolves is probably going to depend to some degree how all their individual economies do, how they perceive the US is moving economically and politically, and how seriously they themselves want to move on big global issues like climate change, infectious diseases, global trade, and so on.
And that's it for our business news. We'll go for that break. Sandile Makanya sits with us after the break. We talk all things this brewing and emerging appetite for filmmaking in the Kingdom of Eswatini. Stay with us.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back. This is Market View, the Tuesday edition. We get into our Enterprise Watch segment, and our focus is Eswatini's film industry, which is no longer on the fringes. It is pushing forward, and it is driven by a fresh crop of storytellers, of course, combined with the older guys, an audience hungry for local content, as well as a shifting perception of what film can do for a nation's identity as well as its economy. But momentum alone won't build an industry. Sustained growth requires structure, it requires policy support, as well as investment. And I wish I could bold the word investment there. All while creatives continue to do what they've always done, make magic with limited means. Now in studio, Sandile Makanya, the chairperson of the Eswatini Independent Film Producers. He's here and is going to help us trace where the industry stands, who's doing the heavy lifting, and what will it take for film to take, or rather to stake its claim as a serious economic driver. Sandile, good afternoon. Welcome to the show.
Thank you. It's a pleasure for me to be here, Professor.
And we hang around, we hang out together at the gym, and that's always fun. But I know you get to work and you do a lot of amazing work as an independent producer and as the chairperson of the Independent Producers Association of Eswatini. And what we're seeing now with this local industry is a growing appetite, not only from the practitioners, but also from the audience itself. Let's start with where things stand. Talk to me about where they stand right now as the film industry from your own perspective.
The film industry, I believe it's at a crossroad. It can either get better or get worse from here. I think everything that needs to be there from the independent producer side has been set. I think the skill is sharply polished. We've been engaging with a lot of independent producers, and we've noted that the skill is sharp. The practitioners are there, although we can't fill every post that is in a major film production. We can fill just enough for the production to go on. And so I believe, and when it comes to actors as well, we believe that the industry is ready to take on big projects and projects that are meaningful and that are not time limited.
There is the creative output, but there's also the institutional support, so to speak. And I suppose that allows us to ask the important question, is this growth being met by the infrastructure? As you mentioned, it's at a crossroads. And if it makes it as our ambition or our aspiration, it needs to have the necessary infrastructure, the necessary funding, as well as the formal recognition at policy level. Where are we standing there?
Yeah, as I was describing that from the independent producer side, everything is on point, we're on standby. Right now, I think government has enough to say these are independent producers, these are producers in the country, this is what they're able to do. I think that what was lacking for the longest time is like, we don't even know the independent producers. What have they done? Who are they? So that question has been ticked off. And so the now question is, what can we do to support them? And I think you talked in the beginning of the show about producers need to apply for a permit to shoot. I think we looked at it from a government's point of view that we need to regulate the space. I think now government needs to change focus to be we need to develop the sector. And developing the sector is on the question of, on Shakailembe, to make an example, they had over 16,000 people to work on that show in total. So you can imagine how many young people, we've just said, over 40% of Emaswada are unemployed. How many people can be hired from a single project that is major? So I think from an institutional point of view, it's the change of perception of, instead of regulating, how do we develop? And the objective of developing is to create employment and develop in the sector.
Speaking about that creative economy, and I love the fact that you mentioned a production that has co-opted Eswatini into it, and I suppose it's a significant number for a production that is not even a local production, even though it's telling a local story from Eswatini, with which you work with, of course. Let's talk about those opportunities. You know, if you will mention the number of Eswatini in that production, as well as, you know, the opportunities that are there in terms of the employment creation for Eswatini in all the different segments or departments within the film industry.
I will start off saying that you said that there's an appetite that is growing outside of people who are in film, but the audience themselves, they want to see Leswati lagibo lidlala umdlalo lomkhulu Shaka Ilembe. And so that demand is there. The market is open and is there. The only thing that is lacking is for a kickstart of the industry, because the industry is almost non-existent, if we can put it in that sense. It's an industry that needs a kickstart. And in Shaka Ilembe, there were over 100 Eswatini that participated. One crew member, which was me, 5 main actors, and then extras as well. So we had to transport them via a bus, and then others flew into the show. And that showed how many people can get impacted. And they really got paid sufficiently well, if I can say. It's an opportunity. If it was sustainable, it was going to be a career.
But now, looking at these new local films that we are seeing locally, I suppose was one that was shown on our news yesterday, that it looks really beautiful. And of course, I could mention a lot. There's Ekhaya, there's Bagangwane, there's Liana, Mahlaba. There's quite a lot of homegrown films here with homegrown talent. The opportunities in this space, is it as good as it looks once we watch the films? Are these people able to put bread on their table after, you know, the production? Is the film itself able to generate some sustainable income?
I will not get into specifics, but I would say some of them were projects where they were well funded to say that they are a career opportunity. If they were sustainable, they were going to be career opportunities. And some were passion-driven. Sibosetu was recognized in Durban Some Film Festival, and he actually won against a South African film. And that goes to show that we are ready. And so I want us to look at the films that were produced in the country, Ekhaya, Bagangwane, Mahlaba, and Ekumbini. All these films that we see, they are passion projects, and we should look at them as a way of, from independent producers to say, we are capable of doing this thing.
No doubt.
The only thing that is necessary at this point in time is not for us to continue to prove ourselves, but it's for the industry to get a kickstart.
It's interesting. And I suppose you've already mentioned what it is that is required for the industry to get that kickstart. Looking at, obviously, we've mentioned Hollywood. There's Bollywood in India. There's Nigeria's Nollywood, as Notsile candidly put it. What can we steal from that to adopt and to adapt?
The one thing that I think we are sitting on that I believe that is called is our culture and who we are as Eswatini. We are so unique and we are so beautiful. And on top of that, we have a story that is untold. The potential of what can come out of this country is unlimited. And that is the one thing that I feel like we are losing over time if we are not creating content that is enough to educate the coming generation, that is enough to shape the perception of the country, that is enough to generate content that is going to generate money and create opportunities, such as career opportunities for these practitioners.
In a minute, what's your vision for the next 5 years, and how do you submit to us, the audience, to, you know, help, not even help, to participate, as well as every stakeholder that is relevant? What are they supposed to do? What is your vision for the next 5 years?
I just hope and I believe that the country is going to get to a point where being an actor, being a filmmaker, is as good as being a banker and a doctor. That is what I hope for. And people who have the ball in their court is the government. Ourselves will always be on standby. It's the government for them to say, what do you need? This is what we need to see in the next 2 years. And we will run. sibandla abaphonsekayo.
So, Mnyama, thank you so much for your time. Sadile Makanya, the chairperson of Eswatini Independent Film Producers Association, they have proven themselves. He has said it, so many films that we have gotten to enjoy, they just need the necessary support now. He's saying that what we are witnessing and what we are calling an appetite and a growing appetite is been mostly passion-led. They just now need the support, and that is a call to everyone who is on the seat to make that support felt, to really make it felt. Let us go for a net break. We have Sunny Lesbia on standby for our market analysis.
Ngikuphela ukulezama ukubalekela ukuthi singumndeni simunye sivale kwazana sonke.
Yini lamanyana lawa wena uyaphila kahle la?
No.
Angeke uyimele lempilo ufuna kuyisusa. Utawushaka kabuhlungu.
What the hell is going on? Don't touch me. What is she doing here?
I needed to talk to her. Sorry.
Man, kokhula sakuna sibonela sejubel nyala.
Hi, sweetie. Unjani?
I'm pissed.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
All right, welcome back. It's exactly 23 minutes after 2. We've started Lesbia in studio. We want to look at our market analysis today. Wall Street, obviously, is Mr. Sbia, as I welcome you. Closing lower across the board. Dow shedding over, 420 points, and the tech-heavy Nasdaq not far behind. What is happening? Of course, looking at the time, just please go through everything.
Sure, thank you, President. So what we're seeing there is basically a reaction to President Trump's 14 letters that we saw going all over the world, threatening tariffs and all of those. So what that brings is an issue of, number one, the uncertainties, in terms of companies and, being able to make decisions in terms of whether you're going to restructure your supply chain or, move your production system. So right now, we are in that sort of uncertain territory. And what this has done effectively for the U.S. markets, Mr. Ngumalo, if you'll see, the numbers are showing that, the U.S. markets have actually just lost quite a bit, all the way from the Nasdaq to the S&P, though they're still at a very comfortable region. So that shows that this uncertainty right now, the markets are getting used to the uncertainty. I mean, you can only cry wolf once so many times, then afterwards we'll just look at you. So I think markets are just waiting for a bit of clarity around that. But right now, that's the main story. And then we do know that at the background of that, there is the mask factor there around that big, beautiful bill that had been passed in the U.S., that there's that mask factor coming into play as well. But then when we move into Europe, you will see that basically the markets seem to be used to this rhetoric right now. So the European markets are doing fairly well, just holding on to those gains. They haven't lost much, relatively flat, but still on the green. So that means whatever the impact is not being felt through the markets that much, because we do know that now we're moving on to August 1. So markets are just focusing on trading right now and doing well in the current period while we wait for the deal. But we do know that Europe overall is hopeful and is pushing to get a deal across the board. UK has a deal across the board already, so that's why Europe is not really reacting that much. When you move over to Asia, again, beautiful mood in Asia, purely because we do know that there is a somewhat of a deal between China and the US, and we do know that Japan is really pushing for a deal. But there is a bit of uncertainty, that's just being felt around Hong Kong. But again, it's just flattening out. And we're not seeing those heavy losses that we saw earlier on in April when this entire uncertainty was new, right? But Japan is hopeful to get a deal across the board and, make sure that they protect the automakers, but which is the main sticking point between Japan and President Trump right now. And then in South Africa, we've seen the markets rebound and we've gained back some 400 points, and that's being driven by the relative weakness of the dollar, and we're also seeing a bit of a tangent into those emerging economies, because this uncertainty in the US does bring about the need for investors to look for other alternative means where to put their money, and we're seeing the Johannesburg Stock Exchange really hoping to get back to that 100,000 mark. And then in terms of the Eswatini Stock Exchange, we haven't seen much movement. And then basically when we then now move into commodities, you can see that because of this uncertainty, gold has actually lost a bit of ground because there is a bit of more movement towards, US yielding debt. When you're looking at the 10-year Treasury yield, you can see that curve is actually just picking up right now because of this new uncertainty. And then in terms of Brent crude oil, there is a bit of a demand-supply mismatch there, with demand being predicted to outstrip, the predicted output increases by OPEC countries. So that's why we're seeing that moving upwards, even though we're seeing there's a likelihood of a ceasefire between Israel and Hamas there. And then in terms of the currencies, we are relatively stronger against all currencies today. That's on the background of this uncertainty in the global markets that's brought about by these Trump tariffs. So we're just holding steady there, back on 17.76 against the dollar and back on 20.83 against the euro, just gaining some a few points against the Japanese yen, staying at 23 cents for the yen.
A key word that you have mentioned is markets are adapting to what is at play, and I suppose that is what Trump has been doing for a very long time. In one sentence, is that good or bad?
It's good in a way, because markets are just now looking at what's happening right now. Because if you could focus on Trump's deadlines, if there's one thing he's proven to now, is he doesn't have a deadline. Until he gets what he wants, it's just going to keep moving it and keep moving it. I think that's what markets are now factoring into the analysis and to their investment portfolio, in the sense that it's not as urgent as we thought it was.
Right.
Yeah.
Thanks, Sanele. So let's be, of course, our economist, in-house economist, giving us his insights. And that marks the end of our show today. Enjoy the rest of the afternoon. Bye-bye.